The crypto market is crashing hard right now, down over 20% within the past week, leaving all the crypto hodlers wondering, is the crash over or do we have further to the downside to go? I'm going to give you the facts in this video. Right now, it's not looking too hot. Over the past week, the markets have been getting absolutely obliterated. The crypto fear and greed index is in the gutter at 17 out of 100 in extreme fear, virtually at levels so low that we haven't seen since the 2022 bear market bottom, when the altcoin market was all the way down at just $400 billion. But yet, right now, the market cap of the altcoin industry is sitting at $972 billion. So I know you're wondering right now, is this a massive trap? Is this a setup to get you to sell your altcoins before a massive reversal to the upside takes place? Or is this just the start of a long and grueling bear market that will wipe out over 90% of investors in crypto? So in today's video, what we're going to discuss is the Bitcoin price chart, some likely scenarios to play out next. We're also going to break down the global liquidity cycle and how this plays out in conjunction for confluence with the crypto market, every single bear market and bull run, and exactly what's happening right now that you do not want to miss. We're going to break down several key indicators that are giving us confluence to the past, and they're all virtually saying the same thing right now for exactly what's about to happen next. So if you're concerned about what to do with your crypto portfolio, this is the video for you. And towards the end of this video, we're going to talk about a key indicator for altcoins that show a clear repeating pattern for where the entire altcoin market is going to go the rest of this cycle. So if you guys are still feeling bullish, if you're still feeling blessed while the markets are down right now, then comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So I'm not going to sugarcoat this video. I'm just going to tell it how it is because this is looking absolutely disgusting right now. A lot of people are feeling afraid. A lot of people are panic selling their cryptos with projects like Ondo down 40%. You know, you got Dogecoin down 37%. Virtually everything is down over the past month, ever since Bitcoin broke below $100,000 and struggled to reclaim the resistance as support. So right now we're teetering at $78,000, and a lot of people want to know, are we going to go lower to backtest the previous range high of roughly $73,000 that we consolidated below for over 200 days? Or will we see a bounce in the market to the upside for a recovery this year, inevitably leading to a massive recovery as well for altcoins? Well, let's discuss it in this video. The first thing that we need to talk about is this chart right here from TechDev talking about a liquidity grab for Bitcoin before the next major leg up to complete the reaccumulation structure, leading into phase D and inevitably phase E to break out into a new all-time high. So one factor supporting this move is the compression we're seeing on the daily Bollinger Bands beneath the basis. So this was posted a while back while Bitcoin was roughly at about $100,000 before the breakdown occurred. And he said, if this continues, the pink path has a high probability of playing out. And as you can see right here on the price chart, that's what we're seeing happening right now. So we would need to see this dip get aggressively bought up to play out similarly to what we saw looking back at our last correction. There's another case for the pink path. In this instance, a Springer liquidity grab below the previous 3-day candle close was necessary before the pause officially ended. So that was this dip right here in the market cycle where everyone is freaking out by the 23rd of January, thinking that the markets were going to crash even further to the downside. And then we saw this dip get aggressively bought back up, leading into the beginning of February. Then a little consolidation period, and then a massive breakout into price discovery for Bitcoin. So let's discuss the likelihood of something like this happening on the price chart for Bitcoin, leading to inevitable recovery, not only for Bitcoin, but for the altcoin market. Because if you've been subscribed to the channel for a while, you've heard us talk about global liquidity cycles and their correlation with the crypto market quite frequently. And recently, if we look at this clip right here from TechDev, his focus has been on the copper to gold ratio as he's come to strongly believe in the strength of its signal. So let's break this down in detail to assess where Bitcoin currently stands on the macro scale. And in this video right here, you can see Bitcoin alongside the copper to gold ratio multiplied by the M2 money supply as a proxy for its cyclical growth. So in this video, you can see the highlighting of the clear correlation between Bitcoin and the liquidity cycle during its major corrections, followed by the decoupling that occurs after the corrections. And another way to analyze this relationship is by looking at the correlation coefficient itself. During Bitcoin's major corrections, there's a strong direct correlation reflected by a high correlation coefficient. However, once the correlation completes and Bitcoin resumes its uptrend, we consistently see the correlation coefficient decline as the correlation inverts. Now, when the correlation coefficient peaks and then plateaus that you could see on the bottom of the screen, it has signaled the end of Bitcoin's macro impulses. And then conversely, when the correlation coefficient bottoms around current levels like we're at right now and begins to reverse, it has marked the inflection point for Bitcoin's next major move upwards, as we have seen each time in the past for the last few bull runs. Now, the question is, will this time be different, or will it play out just like history has played out every single time in the past? So on this chart right here, you can see those three phases highlighted in red, green, and blue to make it really simple and color-coded, because from this perspective, the evidence is compelling that Bitcoin's hockey stick-like inflection in its macro move hasn't even begun yet, as we're at levels right now that we were at before the massive move for Bitcoin to the market cycle top. And another powerful way to gauge the state of this liquidity cycle is through its 2-month stochastic RSI K line. Clear surges in blue lead up to the red peaks that you can see on this chart right here, which have consistently aligned with Bitcoin's macro impulse tops. So in between, we can see orange bumps that represent Bitcoin's more gradual initial rise. And each time this line inverts off the bottom and begins its next blue leg up, Bitcoin has historically reached its inflection point. And you can see this compared to the past as well too on what happened, very similar to what's happening right now. And we can also analyze the 2-month LMACD line, whose cyclical landmark shows an undeniable connection to Bitcoin's. As a lagging indicator, LMACD tends to approach the bottom trend line just as the stochastic RSI begins to reverse, which is precisely where we find ourselves right now. So while the momentum indicators of the copper to gold ratio suggest its cycle is reversing as expected, it's worth examining the individual copper and gold charts themselves. So a closer look shows copper is still in a consolidation phase, though nearing its end. Meanwhile, gold appears to be working through a topping stage. A breakout in copper alongside a reversal in gold would align perfectly with what the ratio indicators are signaling, and both charts supporting this outcome. So that gives us the first piece of the puzzle. From a liquidity cycle perspective, it sure looks like Bitcoin still has months and months of upside ahead, even with the short-term temporary manipulation in the market happening right now. So why even consider the possibility of a Q1 or Q2 market cycle top that would justify de-risking from the crypto market if things potentially get worse from here? Well, to answer that, let's walk through the development of a new topping indicator called the Bitcoin meter that TechDev created. And I'll leave a link in the description below for you guys to be able to check out all these charts for yourself. And also you'll be able to add this indicator to your favorites list as well too, so you could be able to pair it up on the chart in real time to see how this is going to play out over the next few weeks and next few months after you get done watching this video. So you've likely seen the line below featured in several charts. It's referred to as the expansion line, positioned 3.5 standard deviations above the 200 SMA. So this line represents a critical breakout threshold. Once Bitcoin moves above it, the market enters serious macro expansion. So you can see we attempted to break above it with the current market cycle top for Bitcoin, and now we're currently below it. Whereas previous cycles, we rallied well above the green line here. But there's much more we can do with this expansion line beyond just identifying breakouts. Looking at past topping points above the line, we can observe a decreasing critical height at each cycle's peak, which is based on the law of diminishing returns. Obviously, it takes more money to move Bitcoin's price higher because the market cap gets larger, whereas the first market cycle was a lot easier for Bitcoin to see explosive growth because its market cap was super small. That's why it pays to be early in spot projects before they see massive market cap growth, which is why we created Altcoin Pro University for you guys that you can check out through the link in the description below as well too, because our research team will share with you which projects are poised for massive adoption over the next few years. You can see them under altcoin picks. You can also get different market updates, DeFi yield picks, airdrop picks, along with getting your questions answered from our research team when you click the link in the description below to join. And we also have over 100 plus expert curated classes. So if you guys get value out of this video, then consider joining Altcoin Pro all the way at the end. I'll come back to this to show you everything that you're getting in a little bit. But before I do, I want to share with you guys one of the best ways to be able to capitalize during this dip right now. Because on the other hand, on this chart for bottoming out, Bitcoin has consistently reached the same exact distance below the line before reversing. So on this chart right here, you can see a structured indicator that plots the height above and below the line that the price reaches, going as far back as possible within the 200-week period required for this calculation. So right away, you'll notice when you look at the video right now that all peaks have consistently fallen along a declining trend line, while all bottoms have reached the exact same level to the week. So this is pinpoint accuracy here. And next, this chart has taken a corresponding transformation to normalize all peaks to the same score level, scaling the value between 0 and 100. This adjustment standardizes Bitcoin's historical cycle extremes, allowing for a clearer comparison across different market conditions. So you can see the color ranges assigned to the scale will become more meaningful shortly in a little bit. And if we were looking for a market bottom, the Bitcoin meter in its current form would be sufficient enough. However, for identifying the next macro top to see if the top is in right now or if we have further to the upside to the go, there's one more adjustment that needed to be made. If you look closely at the past peak positions, you'll notice that during the latest, more rounded impulse cycle tops, the Bitcoin meter hit 100 several weeks before the actual top came in. So this was a leading indicator. And this early signal was also a shortcoming of the Bitcoin top gauge. And it's something that needs to be overcome here, because by applying a bit of EMA-based smoothing, we eliminate the week-to-week jumps in the signal, making it much cleaner and easier to see. And more importantly, this adjustment causes the Bitcoin meter to peak exactly at 83 during the last two impulse tops. So while we do lose visibility on the 2015 top due to the smoothing effect and just because there wasn't enough data to track it properly on the indicator, TechDev still believes this refining metric proves strong insights into both Bitcoin's macro tops and market cycle bottoms going forward. So the green zone that you can see right here, which we are about to enter, has historically signaled an acceleration in price advance, marking the run-up phase towards the top. And the red zone, on the other hand, has consistently indicated imminent impulse topping, signaling that the market is approaching a high-risk exhaustion point. And alongside the Bitcoin meter itself, he's also created an indicator that colors candles based on its reading. So the indicator is built across the weekly time frame and should be used accordingly for the most accurate signals. And both the Bitcoin meter and the Bitcoin meter candles are now available if you're watching this video right now and you have your TradingView account. If you don't have your TradingView account, use our referral link in the description below. Yes, we do earn a small percentage because that is our affiliate link if you get the paid version. Now, you don't need to do the paid version. You can do the free version. I do the paid version just because you have other benefits and features of that. But these two indicators are free and you can get access through the link in the description below. And you can use these indicators to better understand market cycle tops and bottoms to know when is the best time to buy or when is the best time to sell just based on data. And then also, if you guys want to be able to earn more money on the front end so that way you have more capital to deploy into the market when it is time to buy, listen to this. April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid. So here we are again at a core dilemma. Our deep dive into the liquidity cycle suggests that Bitcoin's major inflection hasn't even started yet. And while metrics like the Bitcoin meter, which measures price extension relative to the expansion line, indicating that a major top could arrive by mid-year, make sure you subscribe to the channel because in future videos, we're going to be discussing some more charts and indicators on how price action could unfold given this unique combination of signals. But for now, this only strengthens the conviction in our exit strategy as we get closer to the top. So before we dive into how this Bitcoin signal factors into the altcoin market, we need to introduce a new altcoin specific signal that's been created by TechDev and also made available for you guys to get access to as well through the link in the description below. We first start by examining the last two examples of a parabolic base, which is the dotted blue curves that you can see right here on this chart with consolidation above it. A clear repeating pattern has emerged with the 100-week SMA in pink crossing above the 200-week SMA in yellow. Now let's take this a step further by plotting the log distance departure between the 100-week and 200-week SMAs as an oscillator, shading negative departures in red and positive departures in blue. So this provides a clear visual representation of where we are in the altcoin market cycle. It's just taking longer with these consolidations and sell-offs than what we saw going into Q1 of 2021, but a similar chart pattern playing out. But this isn't just a visual tool. After closely analyzing the data, it's believed that we can use this departure quantitatively to help time the altcoin market top. And looking at the past cycles, the departure values at the top of the sign of strength consolidation and the recent retest top were identical. So the consistency can show that the 0.27 departure level could mark the next major altcoin top. So this indicator is called the altcoin oscillator. And when you click the link in the description below, you can get access to this. It'll take you right here to TradingView. And if you're logged into your account, you just simply click add to favorites right here. And then if you type in total 2, which is the crypto total market cap excluding Bitcoin, and you load this chart, you can use this in conjunction with the Bitcoin meter indicator, or you just simply click indicators and you select it as a standalone indicator if you want. And if we look at where we're at right now for this oscillator relative to the zero line, we're at 0.03. So if I were to just trace up a vertical yellow line for when we were at this exact same level last bull run cycle, it was roughly around January of 2021 when the market cap of the industry was right around what looks like $350 billion, breaking upwards of $700 billion, and then going through this consolidation right here before we reached the first peak in the market. Whereas this time around, we're not breaking out, but more so we're pulling back in to the consolidation levels that we were at all the way here between April of 2024 until November of 2024. So the chart is looking very different. But the indicator is showing confluence for where we were in the past and how much further we could potentially have in this market cycle if we see a breakout from here. So let's keep going. If you guys are getting value out of this video thus far, make sure you like and subscribe. Now let's bring in the Bitcoin meter and see how it aligns with the altcoin market for confluence. So as we just observed, Bitcoin breaking above the expansion line has consistently marked major reversals in Bitcoin's dominance to the downside. So this relationship suggests that tracking Bitcoin's position relative to this threshold, which is the basis of the meter, can provide key insights into when altcoins are likely to enter their strongest phase of outperformance relative to Bitcoin. And when we overlay the Bitcoin meter, we see a clear relationship with the alt season oscillator, transitioning from pink to green in the Bitcoin meter, which TechDev believes we're about to see has occurred around the same time as the altcoin oscillator crossing above zero, which is happening right now. So we also see the familiar altcoin top lag relative to Bitcoin reflected in this picture. And historically, 3 to 5 weeks have lapsed between Bitcoin reaching its top, marked by a Bitcoin meter reading of 83, and altcoins reaching theirs, potentially signaled by an altcoin oscillator reading of 0.27. So if we're at 0.03 for the altcoin oscillator, and the Bitcoin meter is at 65 right now, not at 83, this further reinforces the expectation of a roughly 1 month lag between Bitcoin's major impulse top and the altcoin market's peak. Now, since the most recent pullback in the market, there's been several questions about whether there's truly enough time left in this bull run cycle before a major recession hits the economy. So with that in mind, we need to take the opportunity to analyze historic altcoin market movements in the context of the lengthening structure we appear to be witnessing this cycle around. So this should help clarify whether the projected time frame remains realistic based on past market behavior, or if we're going into more of a super cycle that's going to be extended with much longer sell-offs and much longer bull runs that could deviate us away from a 4-year market cycle theory. So after the parabolic bull base in altcoins, we see a yellow sign of strength consolidation. So this is followed by its retest, which has occurred right at Bitcoin reaching the expansion line that you can see right here. But the difference is this market cycle is unfolding more slowly than ever before. And to help visualize this, he's taken the structure of the last leg and simply stretched it out, shown in light gray right here. If this slower pacing continues, Q2 of this year looks like the most likely for an altcoin top. That said, acceleration is still very well possible depending on what happens over the next week or two, and we'll be watching closely and covering that on this channel for any signs of it. But due to the significant lengthening of this move, what previously was a 2-month pause thereafter could now extend into a 6-month break. And additionally, we have to prepare for this pause to take on an expanded flap or sharp corrective structure rather than running flat or rising character we saw last time. This could mean a heavier impact on altcoins, making it even more useful to de-risk into this next top that comes if there's a breakout in the market. Even if this turns out to be just an intermediary correction with the macro top not arriving until, let's say, Q4 of 2025 or even Q1 of 2026, an exit and reinvestment strategy around the next peak in the market will still allow for plenty of gains thereafter, while also hedging against the lower probability that it represents the macro top. Now, that's not financial advice. These videos are purely for education and informational purposes only. There's no guarantee that the market continues to the upside from here. All we're doing is we're just reporting the data, the charts for you guys to come to your own conclusion. And you have to take full responsibility for your investment decisions because crypto is definitely risky. You could lose money in these markets. And just because we saw these indicators play out like this in the past, signaling market cycle tops for both Bitcoin and the altcoin market, doesn't mean that we'll see the same thing this bull run cycle. Although the likelihood of it and everything that I just showed you guys in this video thus far is showing us we're right along schedule. Even while Bitcoin pulls back below $80,000, we're still looking pretty healthy in my opinion. We are above the resistance from February that we consolidated at for 200 days. And so I mentioned this a while back that it's completely normal, although it's very scary for Bitcoin to dip back down and bounce off a previous range high as support, as we've seen several times in the past. We even saw it right here on the 5th of August, bouncing off of this consolidation range high right here as support with this candle wick. And we saw this happen several times back in the 2016-2017 bull run. When we break a range, we back test it as support and form a new range. And so every single breakout, virtually every single one, not all of them, you can see these breakouts take place right here. And then you see these back tests as support. Breakout right here, back test as support. Breakout right here, back test as support. Massive breakout right here. Even though we didn't backtest this as support of $1,400 for Bitcoin, we did see a massive sell-off to the downside before that got bought up and we rallied all the way up here to the market cycle peak. So there's consistent 20-40% corrections on the way up every single bull run cycle. And right now, this correction is only at like 30% right now. So I don't think anything's out of the ordinary here, even though it seems like it is. It seems like the world's ending. Everyone tells you that we're going into a bear market. What this means for me when the markets are in extreme fear and I see confluence on all of these charts, virtually all saying the same thing, that we still have further to the upside to go, what do? Well, I get in my truck, I buckle it up, and I back it up all the way to the bank. I grab the bags, I pack them and stack them, and I leave no bags left behind because I believe that the spending power of the dollar is going to continue to go down in value. That's a fact just based on inflation. The monetary print orders from the Fed and the Treasury, they're never going to stop printing money. The inflation goal of 2%, they're struggling to keep it at that. Inflation's at 3% right now, so the dollar is forever going to lose spending power. And that's an actual fact. That's not an opinion here. Blockchain technology, distributed ledger technology, cryptocurrencies have been gaining adoption over the past few years, and they're going to continue to gain adoption over the next few decades because the whole financial landscape of the globe is completely changing. So, in the short term, I get it. To be bearish, de-risking, selling off seems like the normal thing to do, but in the long term, my opinion hasn't changed whatsoever. I am extremely bullish. That's why we've gone all in and we launched Altcoin Pro University for you guys to properly educate you on what to do during a bull run and even during a bear market, because crypto is not just for one cycle, it's for life. And if you know what to look for during market pullbacks like this, then you can know exactly what are the best projects to consolidate into. If you want to congregate your portfolio and not hold too many different altcoins, you need to know exactly how to find the best ones. For example, our team even said Solana is most likely to be one of the easiest trades next year. And this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.